Good day, everyone. I hope everybody's doing fine. And we are back to our channel um, to looking into a new assessment feedback. Today, we're going to look at the first assessment most of you will be doing if you're doing the Diploma in Accounting qualification in AQ 2022 format from the AAT. The first assessment is called Financial Accounting, Preparing Financial Statements, or in short term, they call FAPS. This exam is for 2.5 hours. So as you know, guys, it's going to be something involving the previously covered AVBK and FAPR units from AQ 2016, Advanced Bookkeeping and Final Accounts Preparation. Now, both of them's been put together to create this new unit, and there are some elements being added and some being taken away, but overall it's a very intense assessment, and this also carries about 40% of the overall weighting of this exam, of the whole qualification. So therefore 40% is a huge amount, so you have to endeavor to get the best out of this, and then obviously they will boost your chances to having higher attainment for the whole of the qualification. And also, if you look at it, this is not in SurePass Viewer, and it's under a new exam software called a PSI Bridge. And this is a standalone software like you do, but it works under Google Chrome. But then again, this has its own security features and everything there. It allows the AAT to be a little bit more careful with, the word they use here, mismanagement of exam softwares. So we are in that portal now. We are looking at it, and here there are some options. You can change the contrast, high contrast, inverted low contrast, and everything like that way. There are loads of things you can look into, and then it gives you an idea of what is the keyboard shortcut. So if you click on it, it will tell you how to answer or control enter and assessment. There are so many things there. You may not even bother about it, but you will be using it a lot. There's an option to flag your questions, and then you also have a highlighter option. What it does, it just make you to highlight a part of a question so that you can use that information there to pinpoint what you're actually looking for. So if you want to highlight something, you click on it, and if you click out here again, and then just highlighter will go away. So it's absolutely fine. You can also by clearing it here. Okay, so anything you highlighted will show up there, and then also this index will show you where we are at the moment when we started the exam. When we start, press continue, and then you will be able to navigate between different questions as you at it. Okay, so my plan is today to do this in two parts. Otherwise, it's going to be a rather long video, which I don't want you to go through it, because instead of that, I'll keep it short. We'll do a part one, which is going to cover these three questions, and the part two will be covering these three questions. Okay, so this is the part one. So let's begin by clicking continue. So the first question we have now, this task about daybook accounting for and monitoring non-current assets. And we're going to look at the first statement here. Details from credit notes sent out regarding a prompt payment discount will be entered initially into where. So if you look at it here, this is the credit note sent out. That means we are sending this out. So we are giving the discount. In that sense, it's going to be a discount allowed. So when you're going to be a credit note sent out for my customers, it will be recorded in discount allowed daybook, because this is something I'm going to send out from my end. So therefore, we are allowing that discount. So if you receive discount, and that means we receive credit note from my suppliers for a prompt payment discount I have enjoyed, that'll be on the discount received. So here, the information will be discount allowed. Then again, they're saying about details of cash sales will be entered into where. And then people say, oh, sales is going to be daybook. Sales daybook, no other choice. But then again, remember, this is cash sales. The word cash here implies there is no credit element involved. Therefore, this is definitely going to be going only in my cash book. Okay, so just be careful with that one. So the next one is, if an item of revenue expenditure mistakenly classified as a capital expenditure, what effect on the following item of the final accounts? So if you look at it here, one of the expenditure is mistakenly been sent towards a capital expenditure. What's happening now? Your bank account or your PLCA has either an increase or decrease there. We're not bothered about it. We are looking at mistake. by mistake an expenditure is been classified as a capital expenditure. So for example, uh, buying of in toner cartridge, instead of putting that here as an office expense, I put that as a part of office equipment. What is happening now? You are reducing your expenses for the year by doing it just so. What is the other effect because of that? Your profit will be increased. So net profit now in that scenario going to be increased because your expenses are lower than you intended. So that is the effect on that one. How about the non-current asset? It also has the same effect because instead of an expense, if I put that as one of my assets, like office equipment asset, and that is also going to increase that office equipment account. So therefore, be careful. There are two effects always, and this is what happening here because your profit is equal to your capital normally. When you have a profit, it is going to increase that capital. Yeah, so therefore, if you look at the accounting equation, asset minus liability is equal to capital. If your liabilities are not changed, if your profit or your capital increases, your current or non-current asset, one of them might have to increase there, or liability will decrease there. But here, the current asset, non-current asset is increasing, but no changes to your current liability or the current assets because there's no mistake on that part. Like for example, we didn't have any problem with bank or anything like that. They haven't anything mentioned about it. It's simply a revenue account has been entered into a capital expenditure. So that is the only problem. Then here they are saying here, depreciation is an example of use of what principle? A materiality, accruals, and business entity. So for this one is definitely accrual because we record the depreciation for the year we use or throughout the word they call the useful life. Therefore, we lose the value of that non-current asset through that time. So that means we using that non-current asset, we're taking the benefit out of it, but it loses some of our value because of depreciation. Therefore, this is something for a accrual principle scenario there. So we'll choose that answer. So this one here I have come across. This was kind of a challenging for me at the beginning because the question was kind of vague. We'll get there in a minute. I'll show that to you why, because a part of it, it has given me some confusion. So if you look at that here, the allowance they have said that here, he receives a part exchange allowance of £9,500. So I have to assume this is the whole amount he received, including VAT in this scenario. But let's see that question by the end of it. All right. So you're working for Dev Johnson, sole trader with financial year ended 30th of June. And then they're saying here, they didn't say the year, that's fine. 2013, okay. So let's see, this is the year it's going to be ending on. So let's have a look how it works. Dev purchased a van for use in his business on 31st of March 2013 for £27,500 plus VAT. So when you're going to put that into our books, we're only going to put the net amount, not the one inclusive VAT. When I'm going to show the amount we're paying out to a bank, from the bank, we will include the VAT figure as well. But in this scenario, in the books, only this amount will go there. He has a policy of depreciating vans using a straight line method at 20% per annum, assuming a residual value of 10% purchase price. The depreciation is prorated for every full month the van is used. So we also have to consider very carefully because it is straight line for the depreciable amount. We have to find out what it is. And then also it will be depreciated pro rata per month or full month of usage. So we have to also consider how many months that's been used. So if that was bought on 31st of March 2013 and 1st of February 2015, so we have to consider that's 2 months less than the whole full year. Example, it's finishing on 31st of January as my next full month. So we start from April 2013 to January 2015. That is 22 months. If you want to have a timeline, you can just do abacus as well to find out which month it's what. Okay, so this is basically give me 22 months to depreciate. But for that one, we need to consider how I'm going to depreciate this value now. So let's get an Excel spreadsheet here. Let's put those figures in question now to see whether we'll be able to calculate whatever is in there. I just preset this one, so we will be able to do some questions on the go, and then we'll amend it as it required. Okay, so now first part here, the depreciable value. Depreciable value is 27,500 minus the £1,000 or 10%, which is 2750. So this is the formula I'm going to use to get the depreciable value. So annual depreciation will be coming down to this equal to multiply by 20%. Or you can also do, divided by 5, because if you know the straight line basis is 20%, that means it's going to be used for 20% 5 years in a row. You will take all the depreciable value out of my the non-current assets value. So we will end up with only the residual value after that. But we will know easily if you just multiply by 20%, it gives you the same answer. So here, that's my annual depreciation. So depreciation, accumulated depreciation for 22 months will be, we have to divide this by 12 to find the monthly cost and then multiply by 22. So I'll get 9,075. So these are the two questions they have here. The answers for that one is 4950. And for this one is going to be 9075. So now if I'm going to consider having two accounts for it, this is the cost. What is that? Is the van at cost account. Delete those because I don't think I use all of that. Yeah, so here, van accumulated depreciation. So these two, I have this available now. The time of I'm going to disposing it, this has the cost value, balance board down figure of £27,500. This one will have a balance board down figure because it's been used for whole 12 months, £9,075 at the end of that 22 months. Not 12 months means end of 22 months because it's been prorated. So this is the amount we have in our books, and we also have to find a way so we can get rid of this figure from the accounts by using the disposal account. So what we'll do now, we will get away trying to see whether we can split this into two screens. Let's see. This one. This one. Oh, it won't let me do it, unfortunately. So we just have to carry on with as it is. So to remove this figure, we have to take this amount and we have to transfer into the disposal account, £27,500. And this also will go into the disposal account as 9,075. We basically removing any existing entries into the books regarding that disposed non-current asset. So let's get rid of the highlighter. We don't need that anymore. So here, let's see now. We will say vehicle at cost 27,500, and this one will give you eventually accumulated depreciation of £9,075. And also, you remember you have received a disposal value of £9,500 here. According to this, you have £9,500 disposal value, which is the whole of that amount. Okay, but this is where the problem is for me, because if I consider this is net of VAT, should be the net of VAT because it gives you amount towards our non-current assets. So let's see here, I'm going to put this towards my new vehicle at cost, £9,500. Yeah, because there's no VAT involved in that according to this. So we just have to put it down here. I can't simply put that on a different way. So, and then what we have here, the difference between them will go into my profit and loss statement. So here, 27500 minus 575, that gives me an answer of 8925. So this amount is the one we had to consider as this is going towards the cost of the what do you call disposal, means this is the loss on disposal. Why my vehicle at cost, it's not covered by the accumulated depreciation and the part exchange value, because this is the amount we are losing out when we are disposing of um, this asset. So now let's see here. Now let's go back in there and check how much the money I'm going to transfer towards a new asset. So if I say new van, the new van has been given £9,500 from the disposal account. And then also it received that amount. Where is that? Where's that? Yeah, there you go. 3,600. So here, 3,600 minus 9,500. It is equal to 26,500. Okay, so this is 26,500 pounds there. Okay, so this is the amount we're paying from bank. But end of the day, when we're paying from the bank, this 35,000 pounds, it's covered partially by this allowance, and how much we're paying from our pocket. So the question now begs, how much is the amount with VAT? So 36,000 minus the 95, sorry, plus the VAT amount multiplied by 1.2, which is 43,200 pounds, minus the 9,500 pounds. I'm getting 33,700 amount. So 33,700. You may ask me how I'm getting it. Let's show that here. So the cost, including VAT, is going to be 36,000 multiplied by 1.2 or 120%, it doesn't matter. So if that is the cost including there, which is allowance was just allowance is 9,500 pounds, and then whatever left rest to pay is going to be this minus this, and I'm getting 33,700. Bank payment. So that solves that part. And we already decided this is a loss on disposal. We'll be happy with that as well. And then now we're going to move to the next part. This is about prior to adjusting the depreciation on an extract of debt trial balance is shown below. The policy is to use the reducing balance method at 20% on value of assets, assuming no residual value. There has been no adjustment for depreciation. It doesn't matter whether there's residual value or not. When you're using the reducing balance method, we only consider the carrying value. What is my carrying value here? So if I'm going to say the carrying value is equal to the cost amount, which is 47,857 minus the accumulated depreciation of 18280. So this is the carrying value. Okay, so this is calculated as cost minus accumulated depreciation. This is how you get to that amount. And then yearly depreciation charge is going to be equal to that multiply by 20% will give me 5915.40. Remember, in this answer, they want it in 2 decimals. So we put one of them 5915.40. And then again, the other one is 5915.40. Yeah, okay. Now, what are the 2 accounts related to this one? Because this is the office equipment account. First one, the debit entry will be the expense of the depreciation charges. So we go here, office equipment depreciation, that is going to be expense of depreciation account. The other one is going to be the accumulated depreciation for the office equipment, which is a liability which goes against this asset account. So this will get added on with this 591540 for this year's financial statements. So that part is done now. 4 marks for that. So it's something you can always try to get the maximum out of it if ever you get one like that way. But let's see what is the next one. The first one is this is about a true or false, or maybe whether it calls a change or a discrepancy with the scenario presented. So here, Dev is trying to reconcile the general ledger for the non-current asset register. So that means you have your books and you have your NCA, non-current asset register. He's looking at fixtures and fittings. The balance on the general ledger after depreciation is £72,382. So that is your book balance. But your NCA, on the other hand, carrying amount showing 65,282. So this is lower than what is in your book amount. So what could be the reason? So the first one is depreciation from the year was omitted from the ledger account. That makes sense, isn't it? Because once you put the depreciation in, your book value after depreciation will be lower. If you haven't done so, it is going to still show a higher amount. So this is definitely could have caused a discrepancy. The next one is an acquisition was included with VAT on the NCA register. So if you have something registered on NCA, but VAT was added on, what could be the carrying amount for that? It is going to be higher, isn't it? If that is higher, that is absolutely, not wrong with that. But then again, it will not be higher than what's in your books. Your books will show a lower amount than your NCA. So therefore, this will not, may not, could not have caused the discrepancy. So be careful with this kind of questions. I know it's 50-50, but this is the difference between you getting a really higher marks and a lower marks. So make sure, give a proper thought before we moving on. So let's see here. If I flag this question, it'll come up with a flag here on the index. It will show the flag here as well. So be careful. If you flag anything there, make sure to go back. All right. But luckily, I haven't flagged anything. This is, I marked everything done. So question number 2 is task number 2. It is related to a period and adjustments. So this task contains parts A to C. Alice owns a business which provides cakes for corporate clients. Who are preparing her year-end accounts for the year ended on 31st of March 2018. Alice is registered for VAT. So they're saying here, which one of these following should not be included in the valuation of inventory at cost? So when I'm going to talking about providing cakes, that is basically a manufacturing business. So the cost of sale itself will be including all the direct costs there, including material, and the direct labor there, and which is part of the cost of sales. And then also you have to consider anything to do with a cost to acquire material, like for example, flour, sugar, milk, those things what you use. Then obviously the cost for bringing them into the production will be called carriage inwards. This also will be part of my inventory valuation. So it's the purchases, inventory valuation there. This is all here. This all can be included in the valuation of cost. But the refrigeration cost, on the other hand, these are clearly an overhead, because whether you use a labor or material for producing, your refrigeration cost is going to be still staying same, because you still will be running your refrigerator. Even though you're not producing anything, you may still run your refrigerator. So you cannot correlate that directly towards the cost of the inventory. So therefore, this will go as an overhead. Therefore, it will not be included in the part where you're going to calculate the valuation of your inventory. An accrual should have been made for the rent. So what could be the missing elements here? So they're asking here, how identify how the following elements are affected by this omission. So we haven't done the accruals. What could have happened because of that? So if you remember, what accruals does it to your expenses? So if you look at that here, when you do an account, let's see here. Let me just bring that AT account in action now quickly. Delete. Let me delete those two as well. Delete. And delete a couple of these as well. All right. So here, when I do an accrual, what we do, we create an expense account on there, and accrued expense. So what is this? This one will have a debit entry for an accrued expense. because this is the expense which should have happened on that period, which is not paid for yet. And then we create a liability here for the given expenses. But then at the year end, this will go into your profit and loss statement, the balance carried down. And this one will be a balance board down, which will go eventually in your statement of financial position. So this is going to be SFP. This is what the normal conventional sense is. But now, if you omitted an accrual, what is happening to your expense? Your expenses is going to be down. If your expenses is down, what's that going to happen to your profit? Your profit is going to be overstated. Okay. So in this scenario, your profit will be higher. And then also because your liabilities have not been entered. If your liabilities are not entered, what is that going to do to your the assets? The assets will have no change whatsoever, because for you, this is nothing to do with that part. Your liabilities also, what is that going to do for you? Let me check what it says here. Yeah, it will have no effect on the liabilities, because um, uh, not effect on liabilities on the asset accounts, because your assets are itself have no effect, because your accrual account will not have any bearing on it, but it will have bearing on your liabilities, because your liabilities will be understated now. If your liabilities are understated, obviously you think, oh yeah, my assets going to be showing higher, but it's not. Asset itself has no effect, but because of the liabilities are lower, which is going to be impacting your other side of the equation. Remember, assets are equal to liabilities plus capital. If your assets don't change, your profit, which is the capital, its increase means your liabilities should have come down there. But for this question, it's no effect for assets. So let's see the next one here. You have the following information regarding the rental income for Alice's business, 31st of March 2018. On 31st of March, an entry of £1,000 were made into rental income account in relation to an accrued income. So let's put that into play here. I'm going to delete all of that because I don't need this. I'm going to go back in there. Let's see a rental income account. This is for the year finishing on 03 2017. Okay, so this is the rental income account. Normally, the income will be recorded here. Since there is an accrual now, an accrued income, we will create entry on this side, accrued INC. So this is £1,000 here. And what happens to the accrual account? Accrued income account will have a debit entry saying rental income, £1,000. This is how we finish the year with. This would have gone on the profit and loss statement. We don't care about it. It's been already adjusted for this year. We need to make a reversal entry. So we will start the year with the balance accrued from the previous year will come back into this year's account. So here, this is the adjustment we need to make. They're asking you complete the rental income account for 31st of March 2018, ensuring the account is balanced out properly. Enter your answers to 2 decimal places. So be careful. If you miss anything with no 2 decimal places, make sure you do that clearly. Okay, so in the previous question also, I remember there was a decimal there. So if you go back in there and check, for example, yeah, I can't do that now. I have to answer and move on. Yeah, now edit and check this one here. Do I have decimal figures? Yes, I have the decimal figures as instructed. So let's complete that one and then go here and edit this now. Then get rid of the index. So here now, we'll find a way to do the reversal. So how we do the reversal? Here we're going to say rental income reversal for £1,000. So if I do a credit entry here to remove this accrued income account, a debit entry will be going here as accrued income reversal £1,000. This is the first part. Okay, so we have done that now. The next one I know, the cash book entries for the year related to rental income was £12,000 because it's money coming into your bank account. It's a debit entry. So here we're going to call this a credit entry for the cash book 1,200 because it is an income. But then also they're saying here, this include, because out of this 12,000, there's a receipt of £4,500, which related to 6 months ended on 31st of July. Because my financial year is finishing on 31st of March. So from that onwards, whatever we paid on this payment or the receipt of it or whatever we received must be a prepayment for the rent for the next year. So that means from 31st of March 2018 to 31st of July 2018 will be all going as a prepayment, which we now have to remove from that rental income amount we received. So how much that's going to be? First, find out how many months they are. So if it's for 6 months up to July, so it started basically from February 1st of 2018 to 31st of July. February, March, April, May, June, July. But only 2 months of it, February and March, will be included in the current year. April, May, June, July, 4 months now has to be taken away. How much that is? If that is going to be 4,500 for 6 months, divided by 6 to find £750 per month, that means 4 months is going to be a prepayment amount of £3,000. So what we do now, we go now and find our prepaid income, £3,000. And then what we do here, we go into our T accounts here. We're going to say prepaid income, rental income, and this is going to be £3,000. If you notice here, the accrued income account, when we had it, it had a debit balance. This debit balance, it is because it's an asset, because your customer owes you rent. But a prepaid income is in fact a liability. Why? They paid you more than they owe you. Therefore, they themselves creating a liability for you. So you have to pay them back in case they don't use that property for their purposes. So that £3,000 now will be in our books. We received it early, but for that financial year, that is a liability because we are going to shift it to the next year now. So once you've done all of that here, the difference between those two will go as my amount we're going to transfer to the profit and loss statement for the value of £8,000. This £8,000 is the only rental income for that year. It is not the amount we received. When you see here, we received £12,000, but we received £12,000, £1,000 to service the debt from the previous year, £8,000 for this year, and 3,000 once prepaid for covering the rent for the next year. So therefore, all three of that included in this £12,000. So it's a really good example when if you come across it. 7 marks for that one. So be careful with this. All right. And they also want you to do in 2 decimals. So I am not going to take my risk leaving anything without a decimal, even they are whole numbers. I'm going to leave them as a decimal figure. I can't change these ones because these are preset answers, but the rest of them, I'm going to leave them as decimals because I have come across this. If you don't use the decimals, even though that's a full amount, there's a potential you lose the full marks for that one because it's not the answer they expect you to have. So let's move on to the next one. So the next question is they're talking about the balance on the receivables ledger control account as at 31st of March 2018 was 27,468. Company's policy to adjust the allowance for doubtful debt to 2% of the total receivables. The company has only one general ledger account which contains specific and the general allowance for doubtful debt receivables. Allowance for doubtful debts at 1st of April was 558.27. At the end of the year, Alice asked to make an allowance for a specific doubtful receivable, 2,380, which she felt she's not likely to be paid. There's no specific allowance previous year, so this is a new specific allowance. And then also you have to make this entry. Now, if you notice that here, there is no irrecoverable debt. Start with, we only have specific doubtful debt and a general doubtful debt. So therefore, in normal circumstances, we make one entry. We make one entry into the general ledger not general ledger, on the journal, to the adjustment of the allowance for doubtful debt, whether they're increasing or decreasing. In this scenario, we have to make a specific debt. Therefore, we had to be very precise because they're given you 4 boxes. So we make the specific allowance once, and then whatever left or after that, any change in your allowance for doubtful debt, we will make the necessary arrangement for that one. So for that one, I'm just going to bring this again to the T accounts. All right, so let's see here. This is my allowance for doubtful debt account, and it has a balance of 558.27. 558.27. So this is the balance board down we got here. All right. So now what is happening now? We have to add a new specific allowance for doubtful debt. Okay, so this one, the specific allowance for doubtful debt, what we need to do, the second account is going to be adjustment to ADD. So here we have to say adjustment because we're increasing it, isn't it? So the adjustment is going to be for the amount of 2,380 pounds, 2 decimal places. So here 2,380 pounds dot 00, and this one also will have 2,380.00 because it's just automatically adjusting on Excel. But what we need to do here, we have to enter a journal entry on the similar scenario. So we're going to say allowance for doubtful debt adjustment account will have 2,380.00. And the next one is allowance for doubtful debt receivables accounts. This is going to be 2,380.00. This is just to do the specific doubtful debt. But now we have to find out what is the change we're going to have it on the other side of it. So let's see here what are the figures we need to calculate. So allowance for doubtful debt, SLCA minus specific debt. Specific debt is equal to 27,468 minus 2,380. So this is the amount. So what is the new allowance for doubtful debt value? So the new allowance for doubtful debt is going to be 2% of that one. So we're going to multiply this by 2%, and I'm getting a new value of 501 pound and 76 pence. So from this value, I need to reduce my allowance for doubtful debt balance to 501.76. I know I have this one, but I only worry about this net specific value there. So this specific amount has to be going in here as a reduction of this allowance for doubtful debt. So from there, we have to reduce to 501.76. So what is the adjustment? The adjustment in this scenario, adjustment will be this minus this. But now how I'm going to adjust this? 56 pound, 51 pence. If I want to reduce that amount by 56.51, I have to do a debit entry. So my first adjustment is going to be adjustment of 56 pounds and 71 pence. 76 pence. No, hold on. 51 pence. And then this one will say allowance for doubtful debt, 56 pounds and 51 pence. So the entry will be in this scenario. The allowance for doubtful debt receivable account will have a debit entry, which reduces that opening amount to 501.76. Once you've done everything here, the amount will be completely acceptable value because what I know now, the amount I will be receiving here will be this plus this. That is the new balance for that. But again, what they're asking you to do, you need to do 2 journal entries. The first one is 56.51, 56.51, and here adjustment for that one is going to be 56.51. That should be the end of it. Now task 3 now, we only spend about 37 minutes now. That's not bad. So 2 questions, we managed to get it out of the way, and we on task to finish this question, and then we'll put a pause. We'll do a new video for the other 3 bit later on. Okay, we have plenty of time. This task is about producing, adjusting, and checking an extended trial balance. Is going to be a fun one. So remember, what they ask you to classify the account, you need to know what type of account it is. Your debt click knowledge will be absolutely fine. Rent received is an item of income, money coming in there. Loss on disposal is going to be an item of an expense which you're going to lose the value. It is going to reduce my profit. Therefore, in this scenario, this is an expense. Then now we're talking about some 4 other examples there. They want to know whether they're going to be creating an imbalance. So let's see here, an invoice which completely omitted from the accounts will not be disclosed by a initial trial balance. Why? If I finish something without something completely not entered, there is no debits, no credits, no amounts, so the trial balance will still match. Remember, there are 6 errors which will not be disclosed by trial balances. What is that? Your error of omission, error of commission, error of principal, reversal of entry, original error of original entry, and then obviously you have the compensating error there. So in this scenario, this is a classical example of an error of omission. The entries made in regards with an invoice for £100 per parcel delivery are completely reversed. This is the reversal of entry because you still have 2 accounts and you still have the same amount, but they are in the wrong side of that account. It will still match your T account. So this will not disclosed by the trial balance. Then let's look at the third one. A bank payment is made for cleaning supplies. Correct figure is entered into the bank. No other entries are made. So this is a single entry error. That means I have made one entry into the bank on the credit side. The payment on the cleaning supplies, which is an expenses account, not recorded at all. There's definitely going to disclose by the trial balance because you will create a suspense account to resolve this issue. Now let's look at the last one. We'll think, oh yeah, this will not, will not, will. So this is definitely will. Do not go into that trick, guys, because it can be all false or similar answers. So be careful. You continuously scrutinize every different scenarios given to you because there's no guarantee will be this because of that. No, it is all in the question. The figures on the purchase invoice on inventory are legible and the wrong figure is entered. They didn't say wrong figure, they put wrong figure. So there is only one figure, even though that is wrong, it's been entered into the ledger accounts regardless. Will that going to cause your account imbalance? No, because that is the error of original entry because my initial entry was completely wrong. So therefore, we have to look at it as an error which will not be disclosed by the trial balance. So now let's see here. The next question is about a bank reconciliation. They're giving you a bank statement value and a cash book value. And there are 4 scenarios, 4 items, which will allow you to find the amount we're looking for here. They're saying here, produce the bank reconciliation statement, use the minus signs to show any overdraft or as the negative figures and all other figures should be positive. Enter your answers to 2 decimal places. And then obviously we had to get that done now. Oh, it's a long question. So let's see here how I'm going to do it. For this one, I'm going to bring my good old spreadsheet back again. I'm going to use this to run my cash book. So here I'm going to just bring this here, copy this one, do a T account here. This time it's going to say my cash book bank column. Okay, so this is my bank account, put it that way. So here, according to my entries, my bank reconciliation, bank statement value was minus £30 and 76 pence. Okay, so this is how I'm starting it. But then also my cash book has a debit balance according to this balance brought down for the value of £34 and 24 pence. So let's put this in play. 34.24. We got that right now. Now the first scenario is we have to update either the bank reconciliation statement or cash book. Remember, when you're doing bank reconciliation, anything in my bank statement, not in my cash book, I need to update my cash book with it because this is the first instance I come across it. Cash book must have that information there. But anything in the cash book, but not in my bank reconciliation, they will be classed as a timing difference because they may appear later date depends on when that either clear or if the client has encashed the check. So it can be outstanding lodgement or an unpresented check. We're not bothered about that yet, but we will see which one it is on the scenarios. They're saying here £50 of bank charge appeared on the bank statements. Therefore, it needs to go here. Say charges for £50. So this amount, we just done that now. And then they're saying here the bank transfer amount of £150 received from Jack Limited. It appears on the bank statement, but not yet to be entered in the cash book. So we also have to say RLCA, which is the receivable ledger control account, £150 from the Jack Limited. So this is JL. So I just say JL here. And then the next two now, we have a check of £250 from TS Martin, which Harun has paid into the bank account. It was recorded in the cash book, which is already here. It's been recorded some earlier, but it's not showing in my bank statement. This is something going to increase the value of my bank statement when they appear in the statement. Why? This is the money into the bank account. So this is one of the outstanding lodgements. We're going to use that TS Martin for the value of £250. It gets added on. Then look at the next one here. Harun has paid a check of £85 to Rosie's Flower. It's not been recorded in the bank statement yet. That means Rosie hasn't gone into the bank to encash the check, or maybe she has done it, but it's not been cleared as of yet. So this is an unpresented check. We're going to put a minus £85 here, and then we'll find out what is the new balance for my cash book. So here, 250 minus £30.76 minus £85. That gives me £134 and 24 pence. But let's check my cash book here. Will that get the same amount? It's going to be equal to that plus that minus that amount. That also give me £134 24 pence. So the new cash book balance matches with the bank reconciliation statements cash book balance. So we have got it absolutely right there. So well done if you get that straight out of the box there. Now let's see this question here. They're talking about a trial balance has been produced for the year for the year ending on March 31st of 2010. A debit column was 71,652. Credit column was 71,602. So now, what is that idea behind it? Because they want you to know, we have to create a suspense account. So let's start with that here. We say suspense account, and we will start with the balance on the credit side, balance pulled down. Why? Because is where the amount is lower. So once you put the suspense account, your debit and credit will match. So let's see the scenarios, see whether any of it will make any effect on these entries as we speak. So the first one is they're talking about closing inventory of balance of inventory has been omitted from the accounts. It valued at 2875. So the narrative has to be used for two different accounts, 2870. 2870. Remember, there is no narrative required, and also you don't need the decimal. So we just put this whole amount there. And also remember, the closing inventory will go into two different statements. One of them is the statement of financial position. Why it goes in there? Because it's a current asset. Therefore, it's a debit entry there. So we will say statement of financial position. But the next entry will be in my statement of profit and loss. Why that goes on the credit side, you may ask? Because it goes as an amount comes off your sale, a cost of sales calculation. Why? Your cost of sales are basically what you started with whatever you have bought it for that year. Closing inventory is not being sold, is it? Because it's still here. Therefore, we take that cost out of there for the cost of sales. So when it comes to profit and loss statements, so we will do that here. A statement of profit and loss, it comes off on the credit side of it. Okay, so here the part is been already done. Next one is Harun has decided to use a savings to expand the business. He has paid a personal check into the bank account for £2,500. This has been posted to the correct accounts, but incorrect side of each account. So what you should have done in this scenario. So if I'm going to do that here, the correct way is debit, bank, credit, capital. That's what you should have done. But what happened here, though, We have done it. Credit, bank, debit, capital. That is completely on the wrong side of it. £2,500. It has been shown as money out of the business. In fact, that is where the money came in. So how to correct this error? What do you need to do first? We have to remove this error. So we do the right entry once, like this way. So we'll cancel that credit entry with the debit entry. But what we do, we reverse that entry. We do that twice, because if you do that first time, we remove the incorrect entry. We do that entry again, that will put the right amount. So here, all you need to do, you have to just decide bank and capital will have £5,000. There's no capital, what do you call, account ever on a debit side. You see a capital account on the debit side, that is going to be something wrong, because owner has used up all of his investment out of the business, and then you will have nothing left there. So no equity. If you get a one like that way, the business is no longer a going concern. So you have to be very careful. So here I have done that now. That is the entry I have made for the second one. Now, third one is we have to look at a payment of £50 rent has been correctly entered into the bank account and omitted from the relevant expense account. So since they say expense account, we definitely know this is a debit entry. So if you look at that here, what should have been entered? Debit, rent, credit, bank. So according to them, what they have said, the bank is being entered correctly. This is £50, done it. And this one, nothing was entered. So to correct the error, what we need to do, we need to make sure we enter that debit on the rent account. So we go here, look for rent here, and put £50 there. And the credit entry will go into the suspense account with the £50. This way, this account will completely get corrected. Because you may ask, why you're not using the bank account? Because the bank account didn't have any error. It was done £50 there. So let's go into the suspense account. We'll say rent £50. So we now got two entries on the credit side for £100. The suspense is not clear yet. We still have to find some more entries. We can clear it. So by the way it looks like it, I know this entry should go here to clear the suspense account. That is how you think as an accountant. We'll get there, we'll find it, but we also have to remember, if there is suspense account on debit side, the other account has to be a credit side there, which you're using to clear it. So let's prove it whether we are right or wrong. So here they're saying here, the total gross column of the purchase returns day book has been overcasted by £100. So here, if it's a purchase return day book, there are three columns there. So we have gross, VAT, and net. What are the T accounts going to be? This is going to be your PLCA. All your purchases, regardless of which simple account for net is, the gross is always on your PLCA. This is VAT, and this is your purchase returns. Okay, so this is the accounts we consider. We need to know whether they are debit or credit. For you, you know PLCA is always a credit account because your payables ledger is a liability. We normally keep that on the credit balance. We owe the money to our suppliers. So when there's a return, this is going to be a debit entry because it reduces the balance, and these two will be credit. So you'll also think like this way. Purchase return means purchase is a expense. Purchase return is a reduction of expense. So we can say indirect income. So this is a credit entry. But now the question is, this was overcast on £100 on the debit side. So if you have PLCA £100 on the debit side more, to reduce that overcast, we have to do payables ledger control account £100 on the credit side. And then last one, but the least, as I promised you earlier, this is going to be my good old suspense account, will be £100 on the debit side. I have said to you, because you have done these two here, this one definitely going to be a debit entry on your suspense. That means your suspense account have 100 on debit, 100 on credit, and they are all covered. Okay, so that is absolutely fine. Give me 1 second, please, guys. So now Let's move on to the last part of the question. Is 6 marks for that one. Is simply how to fill in these boxes now. So let's see what they are. The first part is we have to fill in any missing information. So they give me these 4 boxes. Opening inventory, which side that's going to go. Opening inventory is going to be always a debit because they've used that as the part of my cost of sales calculation. We add that together with the purchase, and then obviously we'll put that on the debit side. But the closing inventory, if you notice, there are 2 entries here. One of them goes here as my closing inventory on my profit and loss statement, which comes up as my negative part of the cost of sales calculation because it gets taken away. But on my statement of financial position, it goes as an asset, which is my closing inventory. And the loss on disposal, as I mentioned earlier, it is an expense. So we'll go that in the profit and loss statement. That allows me to find a profit and loss value. Now, if I look at my debit side, it's lower than my credit side. So income is more than my expense. Therefore, I have generated a profit of £27,190. So if I have that here, that will go on my statement of financial position as a profit to increase my owner's capital. So if you do that here now, all of those balances are now matching. If you look at that here, 189,695 debit and credit here, 81,980 pounds debit and credit here. So that is absolutely fine. So we're going to complete this. I'm going to submit the assessment for just to show you whether I have get everything right at the moment. So I'm going to just check everything previously. Anything I missed out there? No, nothing missed out there. It's fine, fine, fine. I'm only concerned about this. Let me do this way. I'm going to see whether doing a debit entry first, then the credit entry. Let's see whether that'll make a difference. So this is question number 3 to see if that gives me any problem. So let me. It says I have unanswered. Okay, let's answer it. Now submit it. It's got 3 submitted answers. Let's see whether you have the right marks for them. Yeah, because if you look at that here, it gave me 23 marks there. I must have missed something out. I need to check what it is because there is 1 mark shouldn't have come off anyway. I think because I'm doing the debit side to the credit side first or credit side to the debit side. I'm going to try that later on to see whether I get the full marks for that one. Okay, so guys, I'm going to cut short this first part. We'll come back a bit later. I think you'll be seeing that on my part 2. We will be discussing the last 3 questions and we will continue with this assessment and hopefully we'll get that uploaded together at the same time. All the best, guys. I'll see you all later and wish you all the best.